Welcome back, YouTube. I wanted to do an update on the current price action here, just to show you guys that everything is still on trend and it's literally doing what we talked about last week. We mentioned here, as far as for this being the current trend here, we got several rejections off of here. And we mentioned that where the liquidity lines were. We talked about where the majority of where Dogecoin likes to consolidate. And of course, that's in this wide area here between like 596 and 709. And we mentioned that there could be a possibility that Doge would do some retracement here to grab some liquidity. And the question was, would it be able to maintain this line, or would it need to actually dip down into where the liquidity is typically known to be? And the question is, not the question, but the the answer to that question turned out to be neither. It didn't maintain the line, but it didn't actually need to break into that liquidity zone. It actually used the buffer of the liquidity zone as a support line. And it actually went up. And it looks like today's going to be a very important candle, but it actually looks like we're rejecting off of the previous trend line here to pretty much reestablish placement. So this could be a really interesting trend line here. Now, it's not impossible for an asset to break trend and then grab liquidity, then literally, for lack of better words, literally go and grab liquidity at a lower level and then come back up and literally pick up where it left off. It's not impossible. It's just something that's very, I think it's very interesting to see. It's certainly something that doesn't happen often. Typically, when you break trend, you establish a new one in a different position here. But it certainly has been done where you've seen an asset do that. And depending on where this candle closes, if we continue this rejection here, and I'll say between today and tomorrow, after the closing of the candle tomorrow, but it's looking like that is what's happening. Even with the previous, we haven't had that rejection, but the fact that it's maintained this line, we'll see, because it could be where we'll have to maybe even move this up. Maybe it's establishing a newer trend at just a slightly higher high. We'll see here. But ultimately, I'll keep this here for now and just kind of see it, use this as a basis point for reference. And if we need to, if we see that it's kind of rejecting, even if it's slightly higher, then we'll make that adjustment. But for right now, I'll just leave it right here. But it's looking like that's what happened. It's looking like it grabbed the liquidity that it needed and was able to move up. So ultimately, we'll see here. This is what we were talking about as far as for getting this gap. We got a rejection because typically once we get above 849, that put us in trajectory to have that run to around like 9 cents, possibly even 10. But it looks like we weren't able to maintain it. We'll take a look here at shorts in a moment. Matter of fact, let's look now. I don't think we saw a huge spike, but let's see. Whoa. Nothing significant here. Nothing significant. So I think that what we could have seen was a sell-off due to even a panic sell. But ultimately, we didn't see anything significant as far as for spikes on shorts or anything. So as of right now, we'll say kind of like the bet is still on. And what's really most important here is what we talked about as far as we're getting this golden cross between two of our bigger indicators. We are a few days away from having a 72 200-day cross here. So this could, this is a really huge signal here for the potential movement that we can have here. Now we could have a death cross, a golden cross followed by a death cross. So like if we were, if we see like a spike in shorts or some bad news or something like that came out, but we'll cross that bridge when we get to it. But as of right now, we're looking at a really huge indicator here because the 72 and a 200-day is a much stronger indicator than, let's say, a 14 and a 72, right? Or 14 and a 200. Because the 14 and the 200, we've kind of been able to kind of ride that up for a while here. But this 72 and 200, that's a much, much stronger indicator than the previous two that we see here. The 14 and the 72, we had a nice run. The 14 and the 200 here, we had a nice run. This could be definitely put us in trajectory to challenge this and possibly give us the momentum to get to like that 9-10 cent range. So that's definitely something to kind of keep in mind here. Let's take a look here at BTC. I believe BTC is somewhat trending along the 14-day, if I'm not mistaken. Yep. So definitely trending along the 14-day. Kind of like what we've seen here. This is obviously it's going to take a lot more price movement here, but you were having kind of like this stagnation here with Bitcoin, like around like that 34 range, and then you got like the cross between the 72 and the 200, and you would kind of come up and challenge a little over 38, about the mid 38s. Here, obviously, the 14 and the 72, you would kind of have like a decent run, but the 14 and the 200, that really just caused an explosion here. And don't forget that when you're looking at MAs and EMAs and stuff like that, you want to kind of look and kind of see the trend of the asset, because for the most part, these are lagging indicators. So when you're looking at these, you want to say, okay, well, this is trending toward this. And so you don't kind of want to wait until you actually have like an intersection, because you can miss some of the explosion depending on how long that actual trend lasts. You can, if you're trying to trade these on, just a little side note, just to kind of know that you can, if you're waiting on it to actually cross, you could somewhat miss a lot of the price action here. So what you want to do is look at it literally as an indicator, know that it's a lagging indicator, and kind of get an overall trajectory to say that, okay, these are the trend lines that we're kind of projecting, and we're projecting across between, like Dogecoin's example, we're projecting across between the 72 and the 200. So just kind of keep that in mind. But for the most part, we'll see that Bitcoin here is literally trending along the 14-day. We could have another cross here between the 72 and the 14, but that's going to be a while before that happens. So I'm not going to put hopium out there or anything like that. But for the most part, this consolidation here, if you can have something in this range between, what's this looking like, 35. So it's like a $2,000 window to play with. So anything that Bitcoin does in between there is fine here. If we start retesting some of these levels, or start having a panic crash or something like that, then that's different. But right now, even before we have this gap, that is 33. So we're talking almost $4,000 to play with. So Bitcoin is, we need something major to happen here to kind of get Bitcoin down to a point where it was threatening to do a gap down. So Bitcoin is, dare I say, in a safe spot, but Bitcoin is certainly in a good position right now when it comes down to stabilizing its current price action here. So I'm not mad at Bitcoin at all for that. Take one more. I was going to take a glance here at Ethereum. So Ethereum definitely had to grab some liquidity, and it's doing something similar. This is very interesting because Ethereum and Bitcoin normally they trace each other almost like a carbon copy. And Ethereum is showing a lot of its trend is kind of switched. It's more so trending having a lot of similarities with Doge. Because here we have the 72 and the 200 looking like it's about to cross. It had to reach down and grab some liquidity, and it's looking like it's trying to maintain that previous trend line similar to Doge here. And it's been doing this for the last couple of weeks. It's really interesting that Ethereum is trending more with Doge now than with Bitcoin as far as for cycles. Because typically you could look at a Bitcoin chart and Ethereum chart, and it was almost the same. Like it just, if you covered up the prices, you wouldn't even like know the difference here. So as far as for the chart, so this is very interesting, this change here. So we can chart this as well. Again, same thing for Ethereum here. Where this candle closes, these are daily candles. Where this candle closes and where the next one closes is going to be really important. But it's looking like very similar. It's trying to reestablish this previous trend line. And I'll say the same thing I said for Doge. If we need to adjust it, whether that be a little bit or a lot based off of how this trend starts to play out, then I will do so. But as for right now, we'll leave it where it is. But for the most part, they're pretty much still on trend as far as for the trajectory. We may have to make some slight adjustments, but it's not anything significant. We were able to go down and grab some of that liquidity in a couple of these assets and really just bounce back up to relatively close to where we were before. So it looks like we're still on that upward trajectory here. we'll keep monitoring this over the next 24, 48 hours, see where some of these candles close, and we'll have a decent idea on where the short-term movement is going to be. We know typically the long-term, we know where that's headed, but over the next week or so, we kind of keep an eye on it and see what we can expect going forward. So with that being said, if you do invest in the stock market, please feel free to check out Moomoo. Get up to 15 free stocks when you deposit $100, and you get 5.1% interest on your money, FDIC insured, so no one's running off with your money. And that link is in the description section. If you have any questions, comments, I'm going to be adding some of the things to this channel this week. I'm also working on a very special project that I think all of you are going to appreciate for crypto. I will try and have that out within the next couple of weeks. I think it'll be very beneficial to everyone. So just kind of keep an eye out for that. But any questions, comments, please leave them in the comment section. I will get to as many of them as possible. Appreciate all of you, and I will see you guys in the next video.